All right, everyone, let's quickly have a look where we are right now from a sentiment point of view as we head closer to the US cash open. It is currently close to 9 a.m. Atlantic Standard Time, 23rd of October, 2024 it is. Now, starting with the FX section, we can see that the dollar is being the strongest currency with the yen being the weakest. So, just talking about the yen, the news going on around the market is that it has to do with the yields pushing higher, which eventually creates an inverse relation with the Japanese yen, and we can see that highly correlation has been seen over the FX and the yield side, and we will touch on that later. Apart from that, a dollar being the strongest without any major catalyst, CAD just being the weakest, I think. There's a fight between the rate cut, which will be coming around 9:45 Eastern Standard Time today. The fight between the or let's just say the argument between the economist is that is this gonna be a 25 basis points of cut? Is this gonna be a 50 basis point cuts? However, if we just look at the money markets, 50 basis point of cut is already priced in. So with that being said, looking about the sterling is still sitting at the positive territory with plus 1.69%. Swiss franc and euro Antipodeans is just consolidating without any clear direction. We haven't had much of from the uh, central bank officials, but if I just look at some of the FOMC members commentary we had yesterday. Okay, so as you can see, we just have had Fed Daily's comments coming out from X, and he's stating the economy is in a better place. Inflation has fallen substantially, and labor market has returned to a more sustainable path. So the problem with these comments is that we already do know that the economy is doing pretty much fine. So that's why he didn't give us any major clue about the further policy rate cuts. We do have know that the currently it is priced in 25 5 basis points of cut by the end of November, and another 25 basis point cuts with aggregate 50 basis point cuts by the end of this year. With that, just so with that, I think we do have had some comments from ECB side. Let me just show you guys that too. Uh, okay, so the comment we had, the
This is
first
further
one
from
is
ECB's notes, just
comes
noting that
from.
large economic deterioration would be needed for larger
Sorry about
cuts.
that.
Says the
So
biggest slowdown in
the
wages is
comments
still ahead of the
coming
US.
from ECB Rehans saying that the growth and outlook has weakened and could increase disinflationary pressures. Rate cuts are coming with the speed and scope to decided later. So it was a clearly
So correction
dovish
on that not
stance
comment, saying the biggest
coming
slowdown in
out
wages is still ahead of us, and
from
also adding
ECB
that trade
Hans. Other
fragmentation would
than
be bad
that,
for
I think
the
we
US and
had
Europe.
some comments from Wilroy. Comments was slightly leaning towards dovish, but still I'm considering those
And commentary
comments
now
as a
from
neutral.
Riksbank's Jansen,
We
stating
had
it's hard to
comments from
see any danger that
PZB
inflation will jump up if they are looking
Hulsman.
at Swedish demand picture.
He said, I think, let me just, okay. So he said something interesting is that in this inflation faster than expected rate cuts was appropriate and others will follow. So with that dovish commentary, more rate cuts to follow. He said that the statement that others will follow suggests that additional rate cuts are likely, signaling a dovish stand focused on further easing to support economic growth and manage inflation. It was a pretty
And
much
Riksbank's Jansen just
and
adding there is a
also this
risk that
was the
inflation could be
first
too low
comment
if
he
they do
made.
not get the economy moving.
I think in his in the last ECB rate season, I think he haven't had made any major significant comments. This one comment was pretty much dovish. With dovish commentary, we have seen some of them these major central ECB central bank officials. We have to ask ourselves that on the last meeting they have stated that the decision they took for 25 basis points of cut was anonymous. So we kind of expect some more dovish commentary. It's not going to be out of any ordinary, out of any surprise that can give us any clue to trade out of these comments. We already expect that if the decision is anonymous, then we definitely gonna get some of the dovish commentaries coming from ECB officials. However, it's going to be more interesting if some of the member from ECB side comes out and give us some hawkish commentary. So other than that, we haven't had any major commentary from Bank of England. I think if I do recall that yesterday. So we had Bank of England Bailey. He didn't make any comments from monetary policy. And if we talk about Greeny seems not convinced by recent CPI weaker. Just a quick reminder, we do have had a very weaker CPI coming out from UK, and he still says that he's very cautious about rate cuts. So that seems to me pretty much neutral. Other than that, we haven't had anything major to look for. Now moving to the equities section, equities stay more sluggish. I think as rising yields keeps optimism in check. Just looking at the China 50, which has been a very major equity across the boards. Especially now these days, as China is trying to put more
And
stimulus in
elsewhere
their
now, commentary
economy,
from
trying
ECB
to buy back
Santino,
some of the
noting that the
stocks,
downside
uh,
risks to growth is accumulating.
Hang
Speaking on CNBC.
saying is up, but marginally. China is trying to push high, but she's still staying close to 0%. I will consider it as a no change. Other than that, EMEA, APEC stock are just consolidating. It clearly a sluggish environment in equities. Uh, Talking about commodities, uh, platinum is the star of the day as it is up by 2.2%. Gold is not losing the ground. Natural gas is doing its thing. Other than that, silver, copper, I mean these two base metals are down without any significant reason. However, we do understand that with the stimulus in China, which eventually be optimistic for the economy, can lead to some push higher for the commodities, but it's just not getting seen. I think it might be not the right time uh, to have a reason to go up for these this base metal commodities. uh, WTI is doing its thing, down by negative 1.45%. I think it's clearly because it's just hit its major resistance level here, and after that we can see that clear a push down towards it's a last resistance, which is now supporting area 71.246, and clearly we are somewhat expecting that it can go right here before maybe making another pushback. So it's the time which will tell us where the energy sector goes. uh, Looking at the US yield is just going up, and the news out there
Mexican
is
retail
that
sales down
with the Trump
0.8%, even then the expected decline of 0.4%
victory,
for year over year. Other month
probability
coming in at
rising,
positive
with that the
0.1%, beneath
yields
the
are
expected
rising
0.2%.
because if Trump's comes, it's good for growth, and he probably will push Powell, I think, FOMC committee to lower the interest rate, which is very much, I think, positive uh, for the economy, positive for the stocks, and I think that's what I think maybe optimistic for the yields. Now back to the yen. So if I just show you the chart of the yen, as I mentioned earlier, it is very inversely correlated with the yen. So we can see that there is a highly correlation with the the yen and the US 10-year yields. So with the yields pushing higher, giving a fuel up to the further weakness in yen, and it's also there is a rumor around that the carry trades might be keeping the pressure on the yen, but we don't have any clear news on that. So with that being said, uh, overall the risk remain pretty much a mix. If we just talk about the FX
ECB
section, and if
Centino's
we just
noting
look
that
at
50 basis
the
points is on the
yield side,
table.
it
So this
seems
data is to
risk
determine the
on,
size of the cuts.
somewhat optimism. But if we look at the equity section, and if we look at the commodity section, it's just a choppy price action there. So be careful out there. There isn't anything major going on. Other than that, we do have some of the central banks speakers coming out at IMF meeting still continues to go. We do have some of the economic major events coming out from US, from
It's worth keeping an eye
UK,
on the dollar
and
still, just
from
pushing
Euro.
high to
Those
fresh
are
session highs. Dollar index last
one
above
of them is
104.50, 104.53,
UK and Euro
and
flash
dollar yen rising above
PMIs,
153.
and we have US flash PMI. Alongside, we have some labor data, US unemployment, US claims data. So those are the one which might can create some volatility and give us some of the bias that which way the currencies can go from further on. So with that being said, if you have any questions, don't hesitate to let me know.